Welcome back. We are back with Brianne Gardner for a closer look at whether we are nearing a market bottom. That's the big question that investors ask themselves at times like this. And I know you've been watching consumer sentiment and investor sentiment numbers as well.
Yeah, exactly. And I mean, usually that is one of the bearish signals that we look at is consumer sentiment. And really, it's kind of hitting rock bottom right now. As of right now, we're seeing signs that investor pessimism is approaching cycle lows, not seen since 2022 or when we had that bear market, right? We saw the S&P 500 sell off 25%, the NASDAQ sell off 35%. And that's when you start to kind of see that fear. And even looking at the extreme fear signal indicator, it is showing more fear, almost on the border of extreme fear. So for us, that is a sign that we could be close to a market bottom. Even looking at the AAII, which is the American Association of Investment or Individual Investors, that's the sentiment survey that is showing us it is also flashing red. So, that is a bearish response that have spiked to levels that we haven't seen in a while. You're seeing a sell-off in the NASDAQ there. Historically, when the AAII bearish sentiment exceeds 50%, the S&P 500 has averaged a 12% gain over the following 12 months. Not saying that history repeats itself, but again, this is a signal that we watch closely. And when everyone's running for the exits, that's often when smart money starts tiptoeing in.
Mm-hmm. Are you tiptoeing in yet?
We are. We did raise some cash proactively in February, started taking some profits and have been, a little selective in what we are doing. I think right now we are comfortable waiting until April 2nd now. I mean, we're 2 days away, right. Just as a little bit of a wait and see how things go from there. But again, I do think it is important to note that consumer sentiment reflects emotions, and it is important to remove emotions away from investing, right? Not letting the market, the news, getting emotionally attached to individual companies or names, but looking at the fundamentals of a stock and seeing the profitability, the earnings per share growth, the technicals, and does it make sense to continue to hold this stock for the long run? Or again, is it time to take your losses or take profits off the table and rotate into something else and maybe again broadening out, shifting into that defensive name? So again, I worry, you are seeing a lot of fear, pessimism, and saying negative headlines that can react or make consumers react a little bit more emotionally, and that is when you do start to see some panic sell-offs.
What about underlying fundamentals? The year got off to a pretty good start with fourth quarter earnings that showed much stronger earnings growth in Q4 than expected. What do you expect to see in terms of market fundamentals, earnings performance for the remainder of the year?
Yeah, I mean, we saw 2024. I think there was a few negative sectors or sectors that didn't really have stronger growth. If you're looking at materials, now expected to see double-digit growth. I mean, we are still bullish and continue to hold our gold position, for example. Energy was negative earnings growth last year, expected to be positive this year. Industrials, healthcare, again, muted, was 5% last year, expected to be 20% earnings per share growth this year. Do we think, going from January to now, yes, there's still a lot of uncertainty dependent on this tariff stuff, but the data is still strong. Yes, we're starting to see weakening data in the economic news, but there is still a lot of cash on the sidelines. And even with this tariff news, companies are being forced to put capital on the side for these potential tariffs. So if, I do think there will be tariffs that will go on, but will they be as bad as predicted? I don't think so. And then I think you will start to see that capital come back into the market to push things higher again. We did need a little reset anyways. Again, looking at valuations were extremely high coming into this year. So seeing a little bit of a reset or a pullback is normal and natural for the markets before we continue this next leg up in the bull market.
The TSX Composite has vastly outperformed U.S. markets so far this year. Can that continue?
My prediction was to see kind of the TSX pick up on the second half of this year. I think there's just a lot of uncertainty in the U.S. right now, but I do think from an economic standpoint, the U.S. is definitely in a stronger position than Canada right now. I think the U.S. dollar versus Canada. I think GDP growth versus Canada in the U.S. Also inflation versus Canada. There's definitely a lot of data that is still showing the U.S. is strong. The consumer is still spending. Where in Canada, I do think our economic data, our housing numbers, et cetera, are all showing a little bit more weakness. However, we are still concentrated. We have energy, financials, and materials, especially materials, gold, et cetera, that have been carrying the TSX a little bit more than the S&P 500 this year. But we are cutting interest rates a lot more aggressive in Canada right now.
That's Brianne Gardner.